Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 19th of September. Fed and Bank of Japan to dominate the week. The meetings of the Fed and the Bank of Japan are likely to dominate this week, with investors hoping for some clarity on the Bank of Japan's easing program and the Fed's normalization path. The Bank of Japan is expected to remain on hold as far as its interest rates and QQE program are concerned, but to tweak the easing program by trimming the purchases of longer-dated bonds. By doing this, the bank aims to boost yields at the long end of the curve and thereby give financial institutions a better environment for earnings. Even though we see a high possibility for the bank to adjust its policy framework as early as this meeting, we consider it very unlikely that officials will opt to cut rates further into the negative territory. Instead, we expect them to just keep the door open for action in the months to come. Alongside the policy decision, we get the results of the bank's comprehensive policy review. The Fed is widely expected to keep its rate hike powder dry, slowing jobs growth in August, lackluster retail sales, a flat core PCE rate, as well as the collapse in both of the ISM PMIs have taken a hike at this meeting off the table in our view. Even the modest upside in the August CPI was not enough to boost the very low market expectations for a hike this week. What's more, the latest signals from various FOMC members have been conflicting, to say the least, suggesting that a consensus to raise rates is unlikely to be reached. As such, the focus will turn to the updated dot plot, the new economic forecasts, and Chair Yellen's press conference following the meeting. Overnight, oil prices gained a bit following comments by the Iranian president during the weekend that the country is willing to participate in a deal to stabilize the global oil market and lift the prices. However, OPEC Secretary General downplayed suggestions of a major agreement in Algeria, as this would be an informal meeting for consultations and not for decision making. We believe that heading into the OPEC and non-OPEC meeting on September 26 to 28, oil prices are likely to remain sensitive to headlines on a potential output deal, and we would like to sound a note of caution as the chances the chances for volatile swings in the prices are high. As for today's highlights, we have no major events or indicators due to be released. The only noteworthy indicators we get are the Eurozone's current account balance for July and the US NAHB housing index for September. As for the rest of the week, on Tuesday is a quiet day as well, with a relatively empty economic calendar. On Wednesday, all the attention will be on the highly anticipated Fed and the Bank of Japan meetings. On Thursday, the RBNZ will announce its rate decision. Having cut rates by 25 basis points at the latest meeting, the bank is expected to remain on hold. But given the RBNZ's strong easing bias in the August statement, we do expect further easing this year. The Norges Bank will also gather to decide on its monetary policy, and expectations are for this bank to remain on hold as well. We share this view as downside risks for Norway's economy appear to be diminishing somewhat. Finally, on Friday, we get the preliminary manufacturing and service sector PMI data for September from several European countries and the Eurozone as a whole. Canada's CPI for August is also coming out. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.